Hi there, Frank here from Remek Trading Systems. In this short video, I'll say a few words about our new indicator called Remek VolTick. That's available as of today in our shop. So let's see, this indicator is used on tick charts and we would think would be probably most useful in intraday trading situations. So let's see how we can put this to good use. Well, to start off with, we just want to recap two concepts, which I know everybody's quite familiar with. Tick would be the number of transactions and volume is the number of contracts. So to use a crazy example, but picturesque example, if you and I go into a car showroom with lots of cash and you buy 5 cars and pay once and walk out with 5 cars, and I buy 3 cars, pay and go out, then there would be 2 transactions at the cash desk, but the volume would be 8. And everybody in the showroom would say, oh, these are large players. Most people, of course, just buy 1 car. So in that case, there would be 1 transaction and 1 contract. Now, similarly, or 1 car. Similarly, let's imagine we are on a 3,000 tick chart. If everybody at a given time would trade 1 contract, then on the 3,000 tick, which would represent the transaction count, of course, if everybody traded 1 contract only, then the volume, this blue volume indicator, would be exactly at 3,000. All right, so I think that makes sense. And if I find, look at that, 3,000 would be somewhere around, somewhere like here, just roughly. So here I drew a 3,000 line. If the volume hit 3,000, that would mean that in that period, whatever that period is, most people, actually on average, people traded 1 contract only. Now, of course, on an instrument like the ES, that is almost never the case. But as you notice, as the market opens, of course, this value will be much larger than the tick value of the chart because larger players start to participate. So building on that concept, let me just erase this line here. And I'm going to double click on the indicator so we can look at the settings and let's see how we can put this to good use. So Remek VolTick is the second one here. And the first and the most important setting here, which I can set for myself, is the volume tick ratio. If I set it to 2, that would mean that I want to put this red line, which is the alert line, at twice of whatever my tick size is. That would mean that I want to be alerted when, on average, market players trade more than twice the size of the tick value. If I set it to 3, that would jump to 3 times. Around 12:30, it almost reached 3, but definitely at 4 p.m. at the close, into the close, and we know that there's nothing new there. Everybody's closing their day traders, closing their positions, or at the end of the week, at the end of the month, at the end of the quarter. Longer term players also might modify their positions or their portfolio. So there's a lot of volume at 4 p.m. and we know that. That's all right. It's not really an area where smaller players like us can successfully participate, but that's a whole different story. But what we notice, and I'm going to modify this, let's say to 2, I'm going to indicators, and here we go. I'm just going to set it to 2. That means that this will jump. I'm on a 3,000 tick chart, so this red line, the alert line, will jump to 6,000, obviously. And check this out. A few times during the session, the volume will be above the 6,000 mark, which means that in those periods, on average, market players traded more than 2 contracts in 1 transaction. And we can use this information to tell us what are the times when large players started to participate. Now, in general, we would want to participate. We want to do we want to go where large players go, basically. So how can we use this information? Well, just right off the bat, I can see a bull flag here. And this is exactly where large players started to become active, let's say here, and then they bought more. Here too, another bull flag, accompanied by more than average tick volume ratio. And this pullback is also, that would be somewhere like this. So we can see that these areas is where larger players participated, as opposed to other areas where it was well below the 6,000, the 2.0 ratio value. Here, large player participated, but that was the 1, 2, 3, 4. This was the fifth pullback. And as we know, trends don't last forever. So this fifth pullback, whoever started to buy here, this trend, well, stopped going higher. I'm sure we can also find situations where the same is true to the downside. Let's see, or look at this. So for example, here, just it jumps off the chart, large player participation. Our algorithm gives us an excellent signal, short signal, and look at what price does. So this is a typical situation where using this information, we are actually able to join the winners and go where the big guys go. Same thing can be said about this area, but in that case, well, the train left the station but didn't go too far. All right? So this is in a nutshell. And just one more thing, this ratio can be adjusted. And I would think the ratio would be different, the ideal ratio. You have to play around with it a little bit, because on the ES, it seems to me that 2.5 might work well. Maybe on gold or some other instrument, you might find that 1.5 works better. Whatever this value is, you can arrive at a value that might work for you. Also, the value might depend on the tick size that you choose. Some people, are okay on a 3,000 tick ES chart. Some people prefer a 500 tick ES if you're a tick chart trader. So with a little experimentation, you can certainly put this indicator to good use. And if you want, you can head to our store and check it out yourself. Thank you very much, and mindful trading.